We are wired this way that we see patterns. And after you've been seeing some charts, I think many of you actually start seeing something. And at least those of you who are trading stocks, you start to see something. You start to see the trends, the volume, etc. There are actually also patterns in stock trading. There is something called double top and bottom. If this pattern occurs, it has a reaction. This is one stock. We print this signal into our stocks. So it found two bottoms. They were not 100% equal, so we reduced the buy signal a bit. The theory says that the stock will go up the distance that I pointed here in this time frame, and it will do it 2 times. So it should be up at this level. Within this period, it should be up at this level. There you see example of a double top formation. We have rectangle formations. They act the very same way. Show you here because we have not implemented that yet. We will do that later into the system. But you have a rectangle formation. When it's broken, you can expect it to move this height up as a minimum. And as I said to you later, anything that involves volume is very good. So you can see the volume also increased when the stock broke the signal. Head and shoulder formations. You see them here. This will also come into our system soon. I think maybe one other company in the world actually produces these signals. It's the same theory. If you see it, this signal, it will go down. You often have the rebounds, which just means it will go back to the neckline. It will fall, and it will go up to the neckline before continuing to fall. If you have it reversed version, inverted, and it's the same. Support and resistance. And again, we are at the places where you actually can cut your losses. Use the accumulated volume to see if your stock has any support. If you're buying, look at, is there any resistance above? Because that may stop it from trading. It may actually force it to go sideways for quite long. You can use the pivot points. Sell and buy on the pivot points and use them as support. If stock is falling, it might stop at the pivot. You can use the trend. Trend is one of the very best things that you can do, actually. Use trend as support. There is also this thing about the rounded numbers, and we see this all the time. 10, 20, 100, the stock is climbing up to 100, stops, falls down, it maybe do 3-4 attempts before breaking 100. And very, very seldom you will find a stock that is priced exactly at 1, 10, 15, or 20. It's like marketing. It is 14.95, 9.95. I said a few things about stop loss. Stop loss is just, if you buy a share, you just say to yourself, at which point am I going to sell this stock? Should I tolerate 5% loss, 10% loss? What is mine? The first thing you have to do is look at volatility. It means how much is the stock going up and down during the day. If a stock is moving extremely up and down, you don't want to set your stop loss too tight, because you may just lose the stock just may be sold. The banks and the traders offer this option. You buy the share and you can just dot in your stop loss level and they will just sell it for you. You don't have to pay attention. They will sell it. So, but you don't want to lose just because of volatility. So you have to take that into consideration. What is acceptable loss for you? Can you handle 10% loss? 5%. And where are my support levels? I guarantee you this, if you don't use stop loss, you will lose money. I'm willing to bet on that one. At our page, we calculate the stop loss based on how it's positioned in the trend. So in this case, we just say that put your stop loss at 11.24. This will update every day. And our system recommends a stop loss of 3.27%. And it also shows another thing. It says for this stock, the risk is medium.